You're watching Newsfeed AM. Let's pick up on the markets now. The rand staging a strong comeback against the dollar this week after months of underperformance, which culminated in the currency touching a record low of nearly 20 rand against the dollar last week. Well, the JSE easing the, let's say closing lower yesterday as investors considered a surprise interest rate hike by the Bank of Canada overnight. Now, today, investors await fresh news for further direction. Simon Brown is JustOneLap founder, joining us now for a quick breakdown of how the markets are performing in early trade. Simon, good morning to you. Let's start with the rand, which has staged a strong comeback against the dollar this week. What's driving the rally, and how is the currency faring, by the way?
Morning, Polly. It's doing well. I mean, 18.85 against the dollar, as you said, almost 20 just a week ago, 23.66 against sterling, and 20.31 against the euro. What's driving it? A couple of things. The first is that when we see the rand blow out, as we did the last couple of months, we often do see at some point some strength return into the currency. We've also had US dollar weakness. That certainly has helped yesterday, which saw it break through the $19 level. And then also things just feel a little better in South Africa this week perhaps than a week ago. We've got less load shedding. Maybe we're going to somehow get the government will pull a rabbit out the hat and solve the problem with the arrest warrant for Putin. Just a bit of a sense of maybe not as dark, as gloomy as we all thought. So rand looking good, and I think we could see some good strength into the close today.
Yeah, and much speculation here, Simon, that it's quite possible that the talk of the BRICS summit moving elsewhere could potentially be part of why the rand is trying to gain some strength. Let's talk commodities. Gold prices edging lower this morning after climbing more than 1% in the previous session. What's influencing trade there?
Yeah, so gold trading at 1,980. It had been down at 1,960 earlier in the week, moving higher. You mentioned Bank of Canada with a surprise rate increase. We had Bank of Australia as well. In both cases, they had paused rate hikes and then came back to reintroduce them. And that spooked the market a little bit. We've got the Federal Reserve next week, Tuesday, Wednesday. Everyone's expecting them to pause. Maybe they don't pause. Maybe they do, and at a later point they start to increase. So it's just getting the market a little bit skittish about this global inflation story, the rising rates. Have we peaked in terms of rates, or we've still got more upside? And that has given some spurt to gold to move a little bit higher. Still off those 2,080 highs of earlier this year and the last couple, but looking better in the last 24 hours.
Let's talk company news. Bidvest saying it expects to report a healthy revenue growth along with a strong real trading profit. This is despite the rising input costs exacerbated by exactly what you've mentioned a little earlier, load shedding in its factories. Talk us through their numbers.
A really strong update from Bidvest. This is for the first 10 months of their current financial year. Of course, we would have seen the interim numbers for 6 months, but it's also off a very high base. The previous year had been a record number. And folks look at Bidvest and think it's SA Inc. How's it doing so well? Well, it's in mining, it's in renewables, it's in hospitality, it's in sectors where there certainly is strong growth potential. And the numbers coming through were way better than what the market had been expecting. Yes, there's some drags. You mentioned load shedding, just general input costs, diesel and the like. Certainly that is hurting, but they're managing to improve margins, improve revenues, and that gives a serious boost to the bottom line.
Let's conclude with MultiChoice. Unfortunately, they are saying they have notified shareholders to expect a significant loss when it presents its financial results for the year which ended on the 31st of March 2023. What happened here?
Yeah, so, earnings had been R3.70 out the previous year. They were expecting it to be down by some R6, which means actually they're going to swing into a loss for the period. There are a couple of moving parts. Some of it is accounting in terms of they've had to write down some businesses that they've bought. Those are non-cash. at this point. But of course, they were cash when they bought them, so they can't get away with that. But also, it's just tough out there. They're finding currency is hurting them because, of course, they buy a lot of their shows in dollars, and then they're charging naira and rand and the like, so that hurts them. Increased costs around the FIFA World Cup last year, which were reading between the lines. They might not have got as much sign-ups as they had hoped, looking at what they had spent on it. So a lot of things going against them there. And as I said, swinging into a fairly chunky loss, it looks like.
JustOneLap founder Simon Brown, thank you very much for that markets update.